I'm Alex Mozed, and welcome to Winner Take All, where we talk about the constant battle between large tech monopolies and traditional incumbents. And today, first thing that we're going to lead off with is Farfetch just released their Q2 earnings. We had predicted on the show back in, when did this come out? July 27th. Full disclosure, I bought a lot of shares of Farfetch. We were talking about StockX and how StockX had a big beat. They're not a public company, but they released a huge, Q2 infographic on how well StockX was doing. And we'd kind of seen some other of these like niche-y used consignment marketplaces like eBay do very well. And so we thought that Farfetch would also do well. Here is the clip from 3 weeks ago. And what we spoke about then, and we're going to talk more about what Farfetch just released, honestly, minutes ago. Came out, and there's a full report which can go into more detail. But basically, the takeaway is they're on fire. This is not cheap stuff. I think one part of this is there's new and there's used. And so, you would say to yourself, I mean, none of this stuff is cheap. There might be discounts and deals to sneakers. The consumers are just captive consumers. They have nothing else to do but go shop on StockX. That's one theory I have. The other theory is that I do think people are clearing out their closets and they do have a lot of extra time and they are saying, hey, you know what? Let me sell this used stuff that I haven't worn or I don't really want to wear anymore. And so I do think you are seeing a lot of used inventory come onto these consignment marketplaces. And then therefore, you probably do get some good deals. Again, still expensive. It's not like you're getting a $500 pair of shoes for $100, but you are getting good relative deals, because there is a lot of used inventory coming online on the supply side to these consignment marketplaces. So StockX and GOAT are both private, but okay. So, my new nickname is going to be Alex Making Money Moazed, because let's look at Farfetch's stock right now. It's up over 6% currently in aftermarket trading. Farfetch blew out their Q2 earnings. Let's take a few high-level takeaways here. They had a 43% beat on earnings. So they had a very strong beat on earnings. So they lost less money than the market predicted. They're still losing money, but they predicted that they will break even in 2021. They had a 74% growth in revenue to $365 million for the quarter. This is the chairman and CEO, founder, Jose. He said, second quarter 2020 was record-breaking for Farfetch. Digital platform GMV was an all-time high of $651 million. We attracted more than 500,000 new consumers, our highest ever, and brands and retailers leaned in to offer the broadest selection of luxury fashion we have ever seen on the marketplace. I would say that's a pretty good quarter for Farfetch. They're in Plaid. They're in the ETF. You can see them at the bottom of the ticker. And so, it makes sense to me why Farfetch is doing well. They did a little bit better than how the RealReal did. Also makes sense. Farfetch is just bigger than RealReal. RealReal is still kind of right on the edge of small, even though they are roughly $1 billion market cap. It's still a smaller platform stock in the grand scheme of public platforms. Farfetch doing really well. Makes sense. Good for Farfetch. I think you've seen this trend in Etsy, as I was talking about towards the end of that snippet from a few weeks ago. We're definitely seeing trends here, in a COVID environment of certain areas of platforms that, that are doing very well and thriving. Not just the massive ones like the Famgas, right? But these are kind of a little bit more niche, single-digit billion-dollar market cap companies, which are just doing really, really well. So if you did happen to invest in Farfetch because of the show, or if you didn't but like the show, please click that like button, that subscribe button, the share button, all the engagement buttons. And what you'll like on the set, let's see if I got this right. This is the Japanese book behind me. This is the Chinese book behind me. And then this is the Korean book. So we're giving some Asia book love back here behind my head. And then we've got English book up front, obviously. I think we were supposed to have a Russia book. I don't know if that ever came out. I think we're also supposed to have like a Vietnamese book, I think. I don't really know what ever happened to those. But anyway, Plaid's doing phenomenally well. We had Kara on. Farfetch is doing well. What other platforms are doing surprisingly well, given what's going on here? Oh, a little company called Airbnb. So Airbnb is reportedly, it's so funny how this happens. Airbnb confidentially files for an IPO in August, and then everyone knows about it. So I don't know why they bother even saying confidential, but they're planning to go public in the fall once we come back from Labor Day. Basically, the story with Airbnb is, and if you remember, these private equity firms, Silver Lake and Sixth Street, they took some options in Airbnb. They gave them like $1 billion in kind of debt with some warrants. Really great decision, I think, on their part, as we see with this IPO. I think the IPO will do very well. Why will the IPO do very well? Well, you have an asset-light business. Yeah, the asset-light business just got torpedoed by COVID. But when we look at the landscape of travel and hospitality and what's going on with COVID and everything, the asset-heavy travel and hospitality businesses have absolutely gotten pummeled. In the short-term real estate rental space, right? A lot of the big high-flying names were companies like Sonder, Lyric, and a couple others. Many of those companies are basically going out of business. These companies, they own leases, right? They are the signor on the leases, and they have a very asset-heavy business model. As we've seen with Booking.com, bouncing back very strongly relative to the rest of the travel industry. Also in Plaid, and just these asset-light versus asset-heavy businesses. The asset-light businesses, predominantly platform businesses. Marriott has kind of like an asset-light business because they have franchisees and they're kind of more just like a service provider-ish kind of business. The asset-light businesses have done much better, and Airbnb has been able to capture long-term bookings. I actually spoke about this probably in April, that you were going to see Booking, Expedia, and a lot of the other big platform players try to move aggressively into long-term rentals. VRBO, I think, owned by Expedia, right? So Expedia also in Plaid. Airbnb, I guess, has been able to hold on to that business, right? They've been able to convert producer community that have all these rental properties into now providing long-term rentals because there's a huge exodus outside of people leaving cities, myself included. So this is an article on Bloomberg about Airbnb's Q2 performance. Their revenue fell to $335 million in the period ending June 30th. That's down at least 67% from the more than $1 billion the company reported in the same period last year. So they had $842 million in Q1. So they had in Q2 of 2019, they had $1 billion in revenue. It's revenue, not GMV. Revenue from Q2 of 2019. So now they're down to 335. Drastic change. Okay. I'm not saying that Airbnb is fine and their business is dandy, but what I am saying is that I think all things considered, they are weathering the storm quite well and they can trim cost. They've been doing layoffs. They've needed to do layoffs. So they've been trimming cost, and there's a lot of fluff, okay, in that P&L. Okay, so it's very healthy, little fat, lots of fat in that P&L that you can easily trim out. There's a key stat that Airbnb tracks, which is do they have 1 million rooms booked in a day? And they just hit that again recently. On July 8th, guests booked more than 1 million nights of future stays at Airbnb listings around the world, the company said. It was the first time to hit that level since March 3rd. Clearly, that to me is a very big milestone. 1 million bookings one day. They hadn't done that since March 3rd, 4 months. Okay, that was a grind for them, but I think they're starting to see, and in other parts of the world that are, no one's really returning to normalcy here, but it's a global business. I mean, you have just in general, probably a global exodus out of people leaving cities and of having remote work. And if you can have remote work and you don't want to be in the city, and especially if you're younger, you don't have kids, if you have less dependencies, it's going to be much easier if you can work remotely to do an Airbnb somewhere for a month or 2 or 3, right? And you can kind of move around. Especially if you have furnished apartments that had meant to be rented for a weekend, what's stopping you from renting that out for a few weeks or a month or a couple months? And so I think you're starting to see that change. Obviously, Airbnb's inventory in the cities, that business is really hurting, and I wouldn't expect that to come back anytime soon. The rentals in cities, but I think especially like tier 2 cities, tier 3 cities that are more spread out. It's like a city, but it's also kind of suburbs, and you don't have as many of these issues with just being in a high densely populated area, which mega cities like New York City, unfortunately, have just been really devastated by. And I don't think are going to be the same for a very long time. Pains me to say it. I spent majority of my career in Manhattan. Our headquarters is right in downtown Manhattan. We paid a lot of money for that office space, and we enjoyed it a lot. And it's just all that has gone away so fast, and it's just really unfortunate to see. I don't think the political leadership there has helped out much in doing it, but they are in a tough time. And I would say they've certainly exacerbated some of the reasons why so many people have left and are probably leaving for a long period of time. But either way, it's unfortunate to see, and it's going to be a tough situation for these big cities. Anyway, I feel good about the Airbnb IPO. I think if you buy into this IPO, we'll see where it's priced at. We'll see if they do the Dutch auction, kind of the direct listing, or if they kind of do the more traditional route. But I think long term, right, as Airbnb's business is able to get that short term rental volume back, that provides a pretty good growth trajectory, assuming they're, if there is a relapse in the winter, then that timeline obviously gets elongated. But eventually, long term, over the next 3 to 5 years, as Airbnb's short term business comes back and they can return to a $30+ billion valuation, where, with these private equity firms, they're valued at 18. So, there's, I think, relatively good upside. We'll see where the thing gets priced. But long term, I do like the makings of what an Airbnb IPO could provide for investors. And they would obviously be in Platt for the next rebalance. So we will see how they handle that IPO. Something that I had just kind of prospected or thrown out there is to say, why doesn't Walmart just buy Instacart? We were looking in COVID peak March, April timeframe. We saw the Instacart and Walmart digital grocery delivery numbers basically flip-flop. Walmart at 50% of total digital grocery orders, and Instacart had about 25%. Now flip-flop, where Instacart went to about 50% digital grocery market share and Walmart down to 25-30% digital grocery market share. Not a good thing for Walmart. And, I think our reason or our thinking for that was that Walmart has linear supply to all of their own stores. Instacart has marketplace supply. They use all these other grocery stores. When you have huge influx of demand, which we had in that crazy couple months, I mean, everything's crazy now, but those really crazy couple months of COVID, Instacart was in the best position to handle that crazy influx of demand because they had marketplace supply. And Walmart stores were just, cleaned out. They couldn't do it. They couldn't meet the demand in the linear model. So now we're seeing Walmart and Instacart partner for same-day U.S. delivery for grocery. They're doing a pilot partnership in 4 markets in California and Oklahoma. Walmart is basically letting you buy their stuff through Instacart. It's a big win for Instacart. Big win for Instacart. Instacart's already, Aldi, Target, Costco, Kroger. If I'm Walmart, you got to buy Instacart. I mean, it's pretty simple. Walmart doesn't want to go through another platform. I mean, they're doing it just because they just couldn't hold out, which is kind of crazy. But I think, is this so much as Walmart capitulating to Instacart, or is this Walmart testing the waters with Instacart and then just buying them? Walmart gets marketplaces. The Walmart marketplace we have covered many times over. I could see, I would not be surprised, and I could see that. I mean, Instacart had a valuation of like $16 billion. Walmart has a relatively, low multiple compared to others, but they've got a $373 billion market cap. And you got, Instacart, I don't think they probably have 50% of digital grocery delivery anymore. That was like all-time peak numbers for them. But even if they have 35 or 40% market share, and if Walmart, if they go back up to 30 or 35%, literally you buy the company for $25 billion and you have 70% of the digital grocery market. Yeah, sign me up. I mean, you have so much demand through Instacart that the other Walmart competitors in the linear grocery business, Aldi and Kroger and these, they just, I think Instacart is too big for those big grocers to leave. So, you don't want to buy Instacart too soon, honestly, for Walmart. You don't want to buy them too soon that you could have a mutiny from the biggest suppliers on the platform. Instacart needs to have such a commanding role in the market that you buy them and your supply is locked in. So I think, Walmart buying them would actually help that. Because now between the two players, you're going to have at least 70% of that digital grocery demand market. So I don't have any insider info. I'm just looking at this like anyone else, but it would make sense to me. Walmart gets marketplaces, and we saw their linear grocery business, which has helped them so much. People have been using pickup in store for grocery, and that's boosted their digital growth numbers. That's been like the lightning rod catalyst growth driver for them. So we've seen that work. Why not double down and bring marketplace model to grocery? That would make sense to me, but see if they would agree with me or not. In not so good news, the Pinterest platform company, public in Platt, having a tough week. Their former COO, Francois Broget, don't know if I butchered that or not, came out with a candid retrospective and inside perspective on the issues that Pinterest has. And basically, what she says is that she was the only female executive at the company. She was brought in pre-IPO. She was there for like 2 years and then they fired her. The reasons why she says that she was fired is because they have a gender equality problem. Not had, but has, present tense. She was fired, I think, this past spring. And now is coming out with this now. I guess took some time to, let the dust settle, I guess. She says she did not sign an NDA. So big mistake on their part for not giving her a settlement package that she couldn't refuse, which came with an NDA. But, what is the story of Pinterest? I mean, when you look at Pinterest board, you've got Bessemer on the board. You've got big time names at big time VC firms on the board. This is a scathing kind of insider perspective from COO. She was like number 2 at the time at the company, underneath Ben, the CEO and founder. My takeaway from reading this was she talks about how she would provide feedback, and, it could be honest, harsh feedback. And basically she started to get excluded from meetings. And she would provide feedback, or she'd try to push and improve and address problems and try to fix them. And then, and thanking her for her candor, they basically shut her out of the meetings. She was the only female in the room. All the guys then just kind of wrote her off and like stereotyped her and discredited her opinion. And then nothing actually got fixed or solved and all this kind of stuff. And I believe her. She provides recommendations in here. I was reading these recommendations and, you can see them here. Stop making grandiose statements without taking meaningful action. Recognize and dismantle the system of gender bias. Take effective proactive steps to root out discrimination. Focus on retention, not just hiring. Stop making decisions in ad hoc, opaque ways. Embrace candor and compassionate leadership. Hold the board of directors accountable. Don't use NDAs to buy silence. What was not addressed in here is, everyone talks about culture, having an inclusive workplace, right? Making sure that you have good gender diversity, demographic, racial diversity, all of these, right? Diversity. She even says it in the article. It starts at the top. And I'd agree with you, Francois. But what she didn't say in the recommendations sounds to me like Pinterest needs a new CEO. If it starts at the top, and she made a comment in here about, she was talking in this blog post about how the board were just kind of like yes men and women. they didn't challenge the action plans that the executive team was putting in front of them. They kind of just nodded. And she was like, she said she made a comment to Ben like, that's weird. I was at Square, Francois, and like they would really grill me. And Ben made a comment back to her being like, oh, I picked everyone on the board. And so the interesting thing, even though Square actually similarly has that very powerful like founder, CEO in Jack Dorsey. Similarly, Ben is that founder CEO. He's got like 20 votes for his for the Class B shares versus everyone else's shares. He has like super voting power. To me, the real challenge that Francois had here at Pinterest was, what do you do when the founder and CEO is not a good CEO? Well, outside of getting fired, I don't really know. And I think she was in a very difficult position. But, from reading this, right, she's saying, hey, I would deliver feedback and try to fix problems. And I was actually taken out of meetings. Anyone who was taking her out of the meetings, the CEO was taking her out of the meetings. He's also the head of product. And she said that he took her out of the product meetings. So like everything in this article, if you go read this article, read through the article. And as you read through the article, think to yourself, is Ben the ultimate problem at this company, right? If these problems are going on and you read through her thing, if you replace Ben and you get the right CEO in there who wants to promote diversity of thought and executives, right? Who wants to make sure that all of the executives are at the table and having a voice and contributing, right? Who has a board that challenges the executives and wants to make sure that, the strategy is really stress tested and spot on and all these kinds of things, right? That she's talking about. To me, it comes back to the CEO. And many of these things, right? Whether it's getting the right culture, if you're in a traditional business and you want to do, what Applico does, which is help traditional businesses buy, invest, partner with other platform startups and like go create these awesome platform, new business models and business units. The CEO has to drive it, right? We won't work with an enterprise unless the CEO is driving it. And that's not an ego thing. That's just a reality thing, right? You got these big companies, and for these, game-changing initiatives or systemic cultural problems, or these any kind of major like company, company changing or material company decisions or problems, CEO has to drive it. Doesn't mean the CEO needs to actually lead it and do it all, but the CEO needs to be the driving force and vision behind what the problem is or what the opportunity is, the challenge, and how to solve it. And then put his or her support behind, the point person and then the other support people that are working to execute on whatever the task is at hand. And so if you read through Francois' post, I think it's a good read. It's, 15-minute blog post here. Think about that, right? How much of this is really, do all the executives in Pinterest are they really the problem? Maybe some of them are. She singles out the CFO pretty good. Maybe they are. But what is the real problem, or what is the real catalyst for change? And it sounds like, now there's two sides to every story, but it sounds like the CEO and founder of Pinterest is the problem and should be replaced. Because if you take it at face value, what she's saying, these are real problems, right? You want to have a culture of diversity, of making sure all the best people are contributing, pushing each other, challenging each other. It's the only way you can actually build a great business. I'll preface it that there's two sides to every story, but it was interesting to me. Like, none of these recommendations here pin the blame back on Ben. That was the weird thing to me. It just felt so obvious to me that all these are real big issues she's talking about. CEO didn't fix them. He actually fired you. So kind of sounds like he's the problem, right? I don't know. I'd be curious to get, anyone else that reads this, your perspective on this article. If you would agree or you see it similarly, or when you read this, you're like, yeah, if this company ever has any shot at changing, you need a different CEO. I mean, there are a spectrum to these, founder CEOs that are able to grow with the company and manage a business with over 10,000 people in it, something like that. We saw one end of the extreme of that with Uber and Travis. Crazy cultural problems, but it is a very difficult thing, right? To be there in the early to mid stages, and then now you have this big company, and you've had certain executives that you've been in the trenches with for years, and it's difficult stuff to do. Doesn't mean, hey, maybe Ben doesn't need to exit the business entirely. That's not what I'm saying. I'm not saying the guy is trying to do something, egregiously or is like grossly negligent or deliberately trying to hurt the business that all of his net worth is tied up in, right? What I'm saying is, as a CEO, doesn't sound like he's a good CEO from this post. Could he be like a really good head of product? Probably wouldn't want to do that, ego, or could he be like a good chairman? Or if you look at what the Google founders did, Larry and Sergey, right? Like, they kind of just worked on like cool stealth projects, right? But they let Eric Schmidt and now Sundar, run the business as that professional CEO. Interesting things to think about. But again, you want to know who really needs to make that decision, unless you want to have an all-out war and have the board kick you out, like we saw with Uber. It's tough. You'd have to get Ben to basically kind of like relinquish his power as CEO. That's an uphill battle. I don't know how you win that battle. I would say Pinterest, though, could probably execute much better on the opportunities that they have, right? Like, where are they with e-commerce? If I want to be critical of Pinterest, right? Like, how are you letting Instagram beat you with shopping? How is that happening, right? Instagram, shopping, commerce, huge thing for Facebook now, huge priority. Where is Pinterest in that? Why haven't they done this? Like, why aren't they leading the charge? Why aren't you hearing about Pinterest leading the charge with commerce and onboarding third-party sellers and merchants? And no, you don't hear any of that. So I think there is, if you do take a step back and you look at Pinterest just strategically, where the business is and where me as an outsider would like to see it, I would say that you do see what Francois is talking about with these issues with culture that do then plague your ability to execute and capture these new opportunities like commerce, which I'm not too impressed with where they are on that. So we'll see. Last topic, we couldn't have a good winner take all session without a little China rumble. Senators urge U.S. Justice Department to probe TikTok. Oh, and Zoom. So this was, back in June or July, started talking about the issues with China's control over TikTok and other tech monopolies. We've spoken about that topic for, since the beginning of the show over a year ago. But what we were also talking about over the past month or two is that if TikTok is in hot water, Zoom should be in hot water. And we've spoken about Zoom's entire product and engineering team being based, guess where? Oh, in China. We actually got flamed by Chinese bots. These are human bots, but they're bots. Humans, though. So we made a video, or we took a highlight clip where I was talking about, Zoom having, there's some blog post that had a nice headline. It was like American head, Chinese body or something like that. And it was on this theme that Zoom has US based sales and marketing, but all the product and engineering is based in China. And if you remember a month ago, Zoom kicked off these Chinese users who were, I think were in the US or Hong Kong, or they had left China. Hundreds of participants that were in these webinars, Zoom meetings. And the Chinese government went to Zoom, engineers and product people in China and said, you gotta stop these meetings from happening. We want you to ban these accounts. And Zoom did it. And then it blew up in the news, and Zoom apologized, and they issued press releases on their website apologizing and saying, we have work to do. We're sorry. We messed this up. We shouldn't have done this. Anyway, that was the video clip that we posted. And then it started getting some traction. It got 5,000 or 10,000 views. And then we started to get flamed by all of these pro-China, anti-US, calling me a liar and fake news, all these comments on the video and in multiple places, YouTube, but really in TikTok. That's an irony. So what I've spoken about since then is that China has a whole army of influencers, human influencers. It's got to be hundreds of thousands of people that literally all they do is go on social media platforms, TikTok, but also YouTube, Twitter. Twitter's been banning people. Facebook just banned a bunch of content, a bunch of US owned social media platforms, and obviously the Chinese owned ones too, to influence not people in China's opinion, but to influence people outside of China opinion about China, right? It's a massive coordinated effort. And I give the Chinese credit because it's genius. It's not illegal, but it is a legitimate, systemic, this is a major initiative. There are hundreds of thousands of people that do this every day as their job. Okay. They post comments on other content to influence people's perception about that content. So that content is negative about China and the CCP. And then the comments are pro, and they're there to influence the opinion of viewers, to have you think as the viewer that, that video is fake, or to discredit the video. And I know these people are human because they would make comments like, oh, I touch my hair, which I do, and that means I'm a liar. Literally, one of the comments in broken English, by the way. So it's written in broken English. And I was like, oh, he touches his hair, which means he's lying. Literally, these are the comments. So anyway, long story short, Zoom, for all the same reasons that TikTok has issues, right? Privacy, national security issues, right? Zoom has a little bit better edge on that in the sense that technically they're a US company, but the founder is from China. He's a Chinese guy, came over to the US, which is fine. But because the founder is Chinese, he started all the product and engineering efforts in China. And that's where they built the whole team in China. And that means all the servers are in China. That means all your Zoom calls go through Chinese servers. We've spoken about this for months on the show. So for the same reasons that TikTok is in hot water, data, security, privacy, Zoom should be also in hot water. That's why the show we had a few weeks ago was American head, Chinese body. And I think this is going to be the real problem on the Microsoft TikTok acquisition. How do you transfer product and engineering outside of China? You got 1,000 people or more, engineers, product people, they know the code, they're building the product. How do you transfer that outside of the country in anything less than 3 years? I just don't know how you do it. I don't know how Microsoft does it. I think it's fraught for huge execution risk. And on the surface, I like the deal, but I don't like the deal the more I think about it and what you need to do to pull this off. I don't think you can do it in a year. No way. No way can you exodus, say, 1,000 product and engineering people who are based in China and move all that, the infrastructure, all your, architecture, all that to US servers and get a US based, or let's just say not US, non-China based product and engineering team. I think there's zero chance that you can actually pull off a transition like that in 1 year on such a huge product, code base, engineering effort, whether it's TikTok or Zoom. I just don't know how you do it. And if you do it, the product will suffer, the quality will suffer, right? Like the rollout won't go well. It won't be as fast, or you'll have latency issues, or it'll just crash. Like there will be problems if you try to do it in a year because you're going to cut corners. It just it's a big problem. So I don't know. What does Zoom do? I think both of these companies need to look at M&A. Actually, like if I'm Microsoft and I'm buying TikTok, I'd buy Triller. Why would I buy Triller? I don't even really care as much about the IP. Maybe, no, I take that back. Why would I buy Triller? Or if I'm Zoom, why would I buy another video conferencing company? It's just basically like an acqui-hire because I need the team and I might use their product or my product, or I might use some of both of the IP or something like that. But I just need the team. Where do you get the team? It's kind of like an acqui-hire, but of like another multi-billion-dollar company. So unless you do that, and I think as Zoom comes into hot water here, when you think about why these companies, TikTok, WeChat, and I think Zoom will also be in a similar boat, why they're in hot water, and how do you get out of that hot water, right? With the people and the data and everything in China. I don't know how you solve the product problem without M&A. How do you solve that human problem without M&A? We'll see what happens with Zoom. But the signs are on the wall. This trend is just going to continue happening. And I think Zoom is another candidate for that. And it makes sense to me why. So except if you're Larry Summers, you don't think that there's any Chinese espionage going on, and you haven't seen any proof of that. And, it's just, I don't know. I don't understand why there's a TikTok ban, right? Yes, you do, Larry. You just don't want to say why. So anyway, on that note, thank you for joining us on Winner Take All, and I will talk to you soon.